Hey guys, in this video, we will teach you the best way to find supply and demand levels that no one else talks about. We will also go over some advanced strategies to take your trading to the next level. You will spend years failing in the markets if you do not understand these key techniques. Before we begin, sorry to keep you all waiting, but we are back in full force and we will be releasing a large amount of new content in the following weeks. So be sure to hit the subscribe button and enable alerts so you don't miss out on any new videos. So again, the number one question that people always ask us is how to identify true levels of supply and demand that have a high probability of playing out. So let's start with the basics. What is supply and demand exactly, and how does it differ from support and resistance? Well, supply and demand are institutional concepts in which we define supply as an area of increased selling and demand as an area of increased buying. Support and resistance, on the other hand, are retail trader concepts, with nothing but what we observe on the charts backing them up. Now, why do we even use supply and demand levels and apply them to our charts? Well, supply and demand helps us trade with the banks. We're able to see where banks are entering and exiting the markets, and we're able to follow them. This results in higher quality trades and much larger risk-reward ratios. So, how do we identify supply and demand? We first need to talk about the different types of supply and demand, and there are two main types of zones: continuation zones and reversal zones. A continuation zone allows us to trade with the trend, where there is a price move in one direction, followed by a pullback on consolidation, and then a further continuation of the dominant trend. Furthermore, there are two variations of continuation zones: an upward continuation zone and a downward continuation zone. Here's what an upward continuation zone would look like. Price initially has a rise, followed by consolidation, and a rise again. Now after the second rise there is a retracement, and this retracement will happen until price reaches the consolidation zone. This is because a level of demand was created within the consolidation zone. So you would enter buys at the demand zone because it's an area of increased buying, and then price continues moving in the upward direction to create a higher high. Similarly, here's a downward continuation zone. Price has a drop, followed by consolidation, and then a further drop. When price retraces, it will retrace into the consolidation zone, as that will create a level of supply. You would enter sells as supply is an area of increased selling. Price then continues to make a lower low. Now, let's go through a couple of chart examples. Pause the video here and see if you can identify an upward continuation zone. Here's a hint, it's around the middle of the chart. Okay, so as you can see, there was a rise in price followed by a small consolidation period, and then a further rise. We know that the consolidation zone will create a level of demand, so we draw it in. When price retraces into the demand zone, we take buys. Price then continues to make a higher high. So again, pause the video here and try to identify a downward continuation zone this time. So there is a big drop in price followed by consolidation. Price then continues to drop further. We know this type of consolidation zone will form a level of supply. So we draw it in, and when price retraces, we enter sells and wait for price to make a lower low. Before we go any further guys, we would like to announce the launch of our new course. We train both beginner and experienced traders from the ground up, preparing them to pursue day trading as a full-time job. You will get access to a private Discord group where we will provide trading advice as well as an ebook and frequent webinars to assist struggling traders. We are currently offering a 20% discount to the first 100 students who sign up. Use the code NEW30 during checkout. For more information, visit our website. Now that we've covered the first type of supply and demand zones, let's talk about the second type, and those are reversal zones. A reversal zone allows us to identify the end of the current trend and the beginning of a new trend. Therefore, we catch higher risk-reward ratio trades in this zone type. In both types of zones, the retracement and consolidation periods of price will form the supply and demand levels. Now, we're going to talk about reversal zones in a much more hands-on manner, as these are much more complicated types of zones. So, what does price initially do? It has a very strong move down. So initially it was in a downtrend. What does price do after that? Price moves into consolidation. And what do you remember about consolidation zones? In both types of reversal and continuation zones, consolidation zones either form a level of supply or a level of demand. Which one do you think it's going to create in this scenario? Since we had a downtrend, right, a strong impulsive move to the downside, we should be reversing to the upside now. So this would create a level of demand, an area of increased buying. So we draw that in, this is our level of demand. Now, once price breaks out, falls back into that demand zone, so there's a retracement, we take our buys. So either over here, both would have been fine. And what does price then go on to do? It creates higher highs and completely changes its trend. So that was the end of this initial larger downtrend. You can already see these types of zones are much more profitable than continuation zones, but are much more harder to find. Now, we need to use much more advanced techniques and strategies in order to identify reversal zones that have a high probability of playing out. For example, this right over here could have been identified as a reversal zone by an amateur trader. However, price broke right through it. Now, there is a core reason as to why that happened, and we unpack that in our course. Now, here's another example of a reversal zone. What does price initially do? It has a strong upward move, followed by a strong downward move. Now, that alone shows weakness in price and a willingness to drop. So, now we identify our level of supply. Take a second to identify which one of these could possibly be a level of supply. So this consolidation zone right here would create the level of supply. If you're a little bit confused, go back to the diagram of the reversal zones and you would understand why this is the consolidation zone. On a reversal zone, a consolidation zone is created towards the end of price, rather than being created in the middle, which is the case for a continuation zone. So you would enter sales as soon as price taps in, and what does price do? It creates lower lows and switches into a downtrend. So in this section of the video, we're going to show you guys how you can combine both reversal and continuation zones to make the most out of them. So in front of me, I have an example. Let's get started. Now, what has price been doing on this run up? It's having gradual increases, right, with big pullbacks. So for example, you take out this high, but instead of moving up, you straight away saw a move down. Okay, again over here, you took out that high, but then again, strong bearish move down. Another move up, retracement, another small move up, retracement, another small move up, retracement, and so on. Now, what's happening throughout this move up is price is creating trendline liquidity, right? So this is a trap for retail traders. This is something the banks would like to target as take profit targets. Now, this is something that we go over in our course, and we will be going over in future YouTube videos. So keep an eye out for that. Anyways, so what we want to do is when we're combining both continuation zones and reversal zones, we want to look for them in specific locations of price. So if we're looking for a reversal zone, we're expecting price to have been overextended and we're expecting a new trend to start. There is no point of looking for a reversal zone if there is no likely outcome in the future that the trend is actually going to reverse. So that's one small tip for you to keep away from fake reversal zones. So what does price do? As it's coming up, right, there is a strong bearish move to the downside. This is the first bearish move that we see, right? All these were bearish moves, but over here we actually break a significant low, right? So we break this low right here, and we break this low. So low 1, low 2. And we actually break this low over here as well, right? So we break 3 lows. This shows us that as price was moving up, right? So there's your strong move up, there's your consolidation, and there's your strong bearish move down. So what will this do? our consolidation zone will create a level of supply. So let's draw that in. Right, so a level of supply is this entire area right here. As soon as price taps in, we take entries. So again, either this entry right here or this entry right here, both would have sufficed. So let's put in our positions. Our stop loss would either go above this high right here or these internal highs. As again, that is something we will go over in future videos, or you can check out our course for that. So our target will be trendline liquidity, which is this low right here. Okay, and what does price do then? Let's just move this to the side so we can see price. After it breaks that, right, price continues to break this low right here. So it has a very significant move to the downside. What is that an example of? A continuation zone. Why? Because we see a drop in price, consolidation, and then a further drop. So what's going to happen when price reaches this area again? It's going to act as a level of supply, right? So what we do is identify our level of supply. So we're going to use that body right there and these wicks right here. Okay, we extend that out in time. The first tap, we take entry. So right here, our stop loss goes above those highs. And again, our target are those lows. Okay, so the other thing we need to point out is no strategy in the board is 100% accurate, and you will have losing trades. You need to accept that in order to excel as a trader. Treat it like a business. If you lose trades, you can always make it back, and losing is part of the process. So the reason I'm saying that is because, say for example, you had this strong move down, right? Now in your mind, you're thinking this will create a continuation zone. Although there isn't any real consolidation to work with within this range, suppose you tried taking a sell at this point, right here. Right, you entered the market right here, your stop loss is right there, and you got stopped out, right? All good. So you would have risked about 1% over here, 0.5% over here, and 0.25% over here. So every time we take a new entry, assuming we have our first position open, we like to decrease our percentage. So you would have had a 0.25% loss over here. Cool, all good. What does price do once it actually moves above these highs? It's clearing liquidity. Again, that's another concept that we dive deeper into in our course, but for simple sense, you see these equal highs. This is liquidity. So what does price do? It takes it out. Now let's zoom in to see what price does after it takes out those highs. So let's zoom in. Right, you can see this is another example of a reversal zone. Why? Because we have a strong move to the upside, consolidation before it moved down. What does that create? A level of supply. So let's identify our level of supply, which is right here. We use those bodies. So as price breaks down from this area right here and pushes back up, we take our sells right over here. So let's put that entry in as well. And we have this same take profit target. So we have an initial entry of 1 to 7.39 risk reward ratio. We have another entry of a 1 to 5.9 risk reward ratio, and a final entry of 1 to 10.78 risk reward ratio. We have two reversal zone entries, the first and the third. Our second entry is a continuation zone entry. So you can see how I'm combining all these concepts together in order to make much more sense of them and to milk the markets. So guys, that's going to be it for today. In our next video, we're going to be going over break of structure and change of character, which coupled with supply and demand levels is a killer strategy. So keep your eye out for that. So until the next video, take care guys.